Hello and good morning. I welcome you to the morning meeting today on Friday the 2nd of February 2018. This is Jens Klatt speaking and exclusively presenting this format to you for JFD Brokers as their global head of research and education. And yeah, we want to have a look at the markets and how things are going right before the NFP. So it's not only the last trading day of the week, but it's the first Friday of the month, and this is usually the day when we have the NFPs, the non-farm payrolls, around the corner. Even though that's something I want to say right here at the beginning, I don't think that chances for volatility are so big, and I think probably we shouldn't be overly excited about this reading. I think currently there's other drivers out there, especially after the comments from Steven Mnuchin last week in Davos regarding the weak US dollar, and that the US economy profits from such a low currency reading in general. First of all, nevertheless, let's have a look here at the DAX. That's another important aspect. By the way, in fact, while talking about the weak US dollar, it becomes more and more obvious that the US dollar, obviously, and the weakness of the US dollar starts to have impacts on the global equity markets. We want to focus here on the DAX, so the German index, but also you can see quite weak performance at the UK equity market, or in the UK equity market here in the FTSE 100, and the potential main drivers for both markets here is, my personal opinion, the strong euro in case of the DAX, respectively the strong pound sterling in case of the FTSE 100. And definitely something which plays a role here. If you look at the fact that the EURUSD pushed again towards 125 yesterday, and this coincided with a weaker US dollar, obviously. So weak US dollar, capability or possibility here to argue why the Dow Jones was capable of stabilizing a quite elevated level, even though currently you can see that there's pressure building, and that obviously now the European equities and the weakness there has some impact on the pre-market phase here, and pre-market quotes in the Dow Jones, which is to be open, and then the spot market here at 2:30 p.m. GMT. But it's definitely one reason to argue with weak currencies here, and this is a huge break yesterday, no question about that. It was a crucial level. We made this a topic several times in several morning meetings, and obviously you can see that the break coincided with further weakness, not just yesterday but also today, and the market is accelerating towards a crucial technical region here, the region around the 200 SMA, the simple moving average here. This is in fact a very rough, even though very significant indicator for the overall trend, and right now we're trading above that, and so everything is fine. Nevertheless, if we push below that level, and if we stabilize below that level, if we start to continue the weakness below this simple moving average 200, chances increase that in the upcoming weeks and months there's further weakness to be expected for the DAX then, and we could probably aim for 12,000 points and even below that level. So quite crucial what we get to see here. So far, it seems to be a little extended on the downside. Let's put it that way. So I don't think that we will make it through this level before US markets open, even though you should definitely have an eye on the developments here around this 200 SMA, because if not today, it could become a topic next week then. And the DAX has to fight a battle here at two sides, in fact. So it's not only that the euro is currently quite strong, and by the way, if the NFPs today disappoint, there's even though the US dollar has already seen some significant losses over the last weeks here, it was a very weak start into the year, and it started already to sell off from last year January onwards, if you want. And we are only talking about one NFP data set, even though nevertheless the thing is that I think that a weak data set here is potentially weighing on the US dollar once again, and is making or increasing chances here that the EURUSD probably can then push and probably close significantly above 125, which is, as seen yesterday already, not very positive for the overall DAX performance. So that's definitely one thing to closely watch the developments here. And then on top of that, we also have the potential of a potential corrective move in the Dow Jones. So why do I say that? Well, it's potentially a lose-lose for the DAX, because if the NFPs come in better than expected, and if the US dollar can profit from this, even though I don't think that in midterm here that the US dollar can profit enormously from just one NFP reading, we have to make sure that we understand that currently the market has nearly completely priced in at least 2 rate hikes of the Fed in 2018. We have still a quite aggressive flattening in the US yield curve, which suggests that there is some potential recession on the horizon, making it more likely that probably the Fed will come out more dovish in their overall monetary policy in the upcoming months then. And this is nothing which the non-farm payrolls can change today, meaning if the non-farm payrolls come in better than expected, it's probably good to get to see a short US dollar bounce on that, but it's probably the best idea to think about selling this bounce instead of buying it and believing that the overall trend would turn only based on one NFP reading. Now, the problem with this is that we've seen yesterday, and I've already mentioned this, that the US dollar, strong US dollar, is probably weak for the Dow Jones then, where it's a sign of at least a corrective move which could accelerate here. So I think one of the reasons why the Dow Jones and also the S&P, for example, can perform that well and started very strong into the year was, first of all, this tax reform which passed the US Senate here, but it's already something where you say, okay, that should be priced in rather sooner or later, because we play this tax reform game, let's say, since the election of Donald Trump already, around fiscal stimulus and all that stuff. So it's somehow difficult to see this as such a significant driver. So probably when looking, for example, then at the currency markets, weak US dollar is one good reason to argue why the US dollar and why the Dow Jones can perform that exceptionally well compared to, for example, the European equity markets, and especially because we don't get to see something like risk aversion right now. So I mean, you could easily, and when looking at the DAX here, at these developments over the last days here, over the last hours, let's say, you could say, okay, well, probably this is risk aversion, but therefore the performance in gold, for example, is not really good. So gold is quite stable. The same is true for dollar Japanese yen, for example. In fact, the Japanese yen is weaker. You usually expect in a risk off market environment market participants to unwind their carry trades, meaning that there is aggressive bid for the Japanese yen then, or also the Swiss franc, which is not happening. And I can, by the way, tell you this because I have a close eye on the developments in the Japanese yen, since I'm still long Canadian dollar Japanese yen. In the seasonal pattern, I made a topic in a webinar yesterday, if you remember. So that said, obviously it has nothing to do with risk aversion, and it's only potentially the currency markets playing a major role here, and the strong euro weighing on the DAX, while the Dow can stabilize at a quite elevated level, mainly due to and most likely due to a weak US dollar here. Meaning, if the NFPs come in better than expected and there's short-term bullishness in the US dollar, and the bulls regain some territory into the weekly close, let's say, I think this could be one reason to expect the Dow Jones to probably push a little more significant below 26,000. So currently we're trading below that level. And if we get to see pressure here, it's difficult not to see the DAX lose further ground on such weakness in the US equity market. So that's a potential lose-lose. And it's not only a lose-lose today, but it's also a lose-lose for the upcoming week. And so all in all, it seems very, very difficult to see the DAX not attacking at least quite significantly the region around this 200 simple moving average. And let's just see whether it breaks or not. And this is the question for the next week then, in fact. In terms of trading setups for today, very difficult. In fact, I was short the DAX here for the day. Also yesterday was a systematic approach. And so far, this trade played out really well too. So it's a very, very good start. If you were short the DAX, it's a very good start into the month then. And now the question is, will there be a more significant push lower? Right here, we have already seen the market pushing now aggressively back above 12,800 points, quite aggressive. Nevertheless, everything bounce, quite aggressive bounce. Okay, now next thought, everything below the 50 exponential moving average here on a 5-minute time frame, nevertheless, is still bearish. And I made this a topic already in the morning when I said that I prefer short engagements. That was when we're still trading here at this level, and this idea also played out really well. And yeah, so in fact, that's it on the DAX. I don't really want to formulate a trading setup right now. The same is true for the currency markets because of the non-farm payrolls. Probably after non-farm payrolls, we can start to think about engagements here. Even though I have to say I prefer a strong reading because I like EURUSD against 2280 to 23, this region here. Before we had it higher, that was last week. Before the it was slightly before the ECB last week. So this is a potential long trigger, an interesting level against which long engagements could be interesting. Therefore, I think we need a recovery in the US dollar. That perfectly plays together with my sell the bounce idea in the US dollar. Dollar Japanese yen, it's also interesting, this thought, because such a good reading in the non-farm payrolls could trigger some further bullishness back above 110, where I consider the region around 110.30, 110.50 potential short trigger here. So interesting region against which dollar Japanese yen could be shorted. Yeah, that's it on the dollar front, let's say. Let's have a final look here at the Canadian dollar Japanese yen, my current trade I'm having on. So I still hope that we'll see a break above 89.60. So I have still my long position on since 88.50. It's a seasonal trade. So far it plays out really well, even though my let's call it trigger here. So I'm anticipating a technical relevant level, for me technical relevant break, if you want. And I definitely push or trail my stop to break even, at least here. If we make it above 89.60, so far I'm still yeah, I'm still in the risk. How do you say that? So I'm still I haven't traded my stop to a point, but it's at the initial risk is still in play, and that's something I want to see here, the push above that level. Yeah, and that's it, in fact. So far this is wait and see. So there's no further big news ahead of us here from the Canadian economy. Data on Wednesday and also yesterday came in as expected, respectively better than expected, holding or giving some further speculation probably for further rate hikes of the Bank of Canada. Yeah, let's just see. Again, now it's a technical question whether we make it above 89.60. Would be much appreciated from my end. Hopefully the market will do me this little favor right before the weekend. And yeah, so in fact that's it on the currency front. We can also have a look here at precious metals before the non-farm payrolls. Also interesting, surely, to look at gold. I mentioned this already yesterday. So everything above at least here 1,325 is bullish, and now that's a little difficult, because I somehow hope that we don't get to see huge volatility before the non-farm payrolls, because this is my potential trigger line at 347, 348, 49 here, where I said, well, if we push above that, thanks to an impulse coming from the non-farm payrolls, this is a potential bullish trigger. So far you can see that it's fake out now. We're trading back now. Probably we have to raise this threshold here a little to 351, but still the same thought. So if NFPs come in below expectation, US dollar is more likely to be weaker, even though most of such a weak reading is probably priced in already, and it's probably not really sad that the US dollar can sell off on such a news here sharply. Even though gold could be interesting if we push above 351, then for a next stint up to 366 and higher from there to 1,400 USD and higher, which also coincides quite well with my overall bearish outlook for the US dollar, for the greenback. And that's it. So I wish you a nice weekend. Enjoy yourself. Take care. Talk to you again then 10:30 a.m. GMT on Monday. Yeah, happy trading. Have fun with the non-farm payrolls, and talk to you soon. I look forward to it. See you, and bye-bye.